If the stock market goes down, gold and silver go down. Okay, well, if you look at what's happened over the last couple months, it's been totally opposite to that. Now, there was that one time where silver did puke with the stock market, but then it dusted itself off and said, you know what? I shouldn't have done this. So zoom, you're back up in the 32, 33 zone. I think we'll come up out of here pretty shortly. And there are some structures overhead on momentum and even on price that say you get back up 34, 35 on silver again, watch out. You could really blow at that point.
Chinese investors made a major adjustment in the gold futures market, cutting their positions by around 1 million ounces on Wednesday night. This move ranks as the third largest reduction ever recorded, according to the COBC letter. It follows a significant buildup of 1.2 million ounces on April 22 end, underscoring the sharp shifts in market sentiment among major players. This reduction came just as gold briefly crossed the $3,500 mark for the first time, pointing to a possible phase of profit-taking or a strategic move to manage risk. Large-scale changes like these in the gold derivative space often lead to heightened market volatility and could affect short-term price movement. Traders are advised to watch closely for changes in open interest and trading volume, which can help signal upcoming price breakouts or reversals. Interestingly, this activity has also stirred conversation in the crypto space, with analysts speculating on possible indirect effects from the sharp moves made by Chinese participants in the gold futures market. On the night of May 2, 2025, their reduction of nearly 1 million ounces came only weeks after their record-setting increase in positions, which helped propel gold past the $3,500 level for the first time in history. Now we'll bring you key highlights from the latest interview. Before that, be sure to hit the like button, subscribe, and turn on notifications so you stay updated.
Prior to this, over the last year, for example, if you'll look at what gold did, it moved up in layers and sometimes would be stuck in a horizontal zone for a handful of months. Go back to April of 24, for example. We said in March of 24, expect the beginning of the bull market again. In other words, it's been asleep for 3 years. And it's sure enough, it engaged, but it still had these layered, time-consuming zones of nothing. Where we just simply hold and absorb the selling and finally can go up again. Well, right now we're in the second week of a pullback period. So in fact, it's not even a full 2 weeks because, anyway, the number of days is a handful. And I suspect this will be brief. It won't be multi-month. I don't think we're going to correct like everybody seems to think. We're going down to 2,800. I think what people are doing, our price chart is when they project, it's all over for now, we got to go back down to here. Every time they do that, what they're doing is they're finding the prior shelf of highs that was broken through, and then you get a surge, and they seem to insist that you must go back to that prior high to test the price high. And gold hasn't done that. Instead, it's pulled back, but never gone back to the prior high. And right now, the assumption is, we're going to have to drop $500 from the high to get down to 2,800, and it's going to take a long time, et cetera, et cetera. And this derails people emotionally and a lot of them get out of their positions. And we made a point of that in the last weekend report. We showed, I think it was 2010, 11 phase in the gold bull market then, where we were in the acceleration phase. And we circled all the times where you had these scary downside breaks and or congestion zones. And we posed a question at each of the breaks. We said, you got out, but did you get back in? Because usually, boom, if you weren't really precise, if you got out, you didn't get back in, unless it made a new high again, in which case you missed a chunk. You get the point. I think that's where we are. Silver's the wild child. When gold had a mild little pullback during that stock market break in the first week of April, silver had a huge break. It went from $35 to $27.5, much of that occurring in 2.5 trading days. And so if you look at a silver price chart, you wiped out the prior major low in December, which had halted. It had dropped from 35 down to just above 30, and went back up to 35 by March of this year, and then puked through that low like it was the end of the world. And in a heartbeat, it went from 27.50 up to like 30 and a half, 31, 32, 33, and right now we're trading in the 32s. I suspect this sell-off doesn't have much more time in days and or price. And that we can see when we look at momentum, whether we're looking at real short-term silver gold momentum, like day-to-day type momentum action, or looking at some bigger pictures, it looks like it's a setup for another surge. In other words, we're just having another pullback. And I don't think silver is going to have another puke. You don't generally have two of them. In other words, if you had one that washed everything out and immediately slingshotted back up into normalcy, you don't do it again. You've had your cleansing. So any people expecting a duplicate cleansing, I think they're wasting their time. Anyway, that's where I think we are.
Meanwhile, gold prices staged a recovery on Friday after slipping to a 2-week low the previous day, as investor interest returned amid easing trade tensions. At the same time, market attention shifted toward the upcoming U.S. non-farm payrolls reports. Gold had touched its lowest level since mid-April and is down nearly 2% for the week, its sharpest weekly drop since the end of February. U.S. gold futures gained 1.3%, reaching $3,263. Despite signs of a more relaxed approach on tariffs, a lot of uncertainty still remains. According to Soni Kumari, a commodity strategist at A&Z, gold continues to appeal to investors, with each price pullback being seen as another opportunity to buy. If the price continues to slide and gets closer to $3,000, it's likely to draw in significant buying interest. China, for its part, is currently reviewing a proposal from the U.S. to reopen trade discussions in light of President Trump's 145% tariffs. However, China's Commerce Ministry issued a warning against the use of threats and pressure tactics. We'll now roll the best moments from the latest interview. Don't forget to like, subscribe, and turn on notifications to stay current with our daily updates.
Don't assume you've got to go back to a prior high. That assumption is not proved valid. And there's another assumption that's been kicked into the gutter, okay? I'm tired of hearing it. If the stock market goes down, gold and silver go down. Okay, well, if you look at what's happened over the last couple months, it's been totally opposite to that. Now, there was that one time where silver did puke with the stock market, but then it dusted itself off and said, you know what? I shouldn't have done this. So zoom, you're back up in the 32, 33 zone after being at 27.50. So it was a mistake on the part of those who sold. But gold didn't really flinch that much. And if you go back and look when the S&P made its highs, which would be like in January. In fact, we put out our first sell signal in the first week of January. And 2 weeks later, the market made a new high. S&P did marginally, and that was the top. Go back and look at what happened from gold through March, April, etc. Stock market from January through March, April, total opposites. And now, what's gold and silver doing over the last week or two? They're pulling back. What's the stock market doing? Rallying. So in other words, forget that notion going forward that we must move with the stock market. No. Those are isolated, rare events. They're not norms. And so people make the mistake of remembering only those particular minor instances and treat it as a norm. And they should have learned over the last several months it's not the case. Gold will benefit from a stock market top. We've argued that all along. It hasn't waited for the top to go up. Obviously, it's been going up solidly for a year plus out of that prior range. And but when the stock market breaks, that changes the data points and also will change central bank policy in the Western world. And I think we'll start to see that with the Fed pretty soon. They got numbers today that allows them to twiddle their thumbs some more. Yesterday, they got numbers that weren't too great, GDP. But the unemployment number today was okay, so they can twiddle their thumbs. And I think they enjoy that because they definitely want to, shove it into Trump's lap. So they can say, well, we came to the rescue like a month or two from now when they start cutting rates. They could claim, well, he did it. We're trying to rescue it. But anyway, that aside, they will liquefy events. When the stock market breaks and the data points go, they'll go berserk again. And what does that do? That just helps degrade the value of the money you have by increasing its quantity. And that's what ultimately drives gold over the long term.
What's your take on Michael's recent comments? Do you agree with his view that a breakout in the precious metal space isn't just possible, but inevitable? Do you think the S&P is reaching the end of its current run? Drop your thoughts in the comments below and let us know if you're staying the course, shifting into metals, or exploring new opportunities in the numismatic scene. Now, go ahead and check out the next video. We think it's just what you're looking for. See you there.